Good afternoon, ladies and gentlemen. I want to welcome everyone to FXTM's Week Ahead Market Themes to Watch Out For. I just want to confirm before we move ahead, could everybody see my screen and hear me clearly? Okay, guys, so I want to welcome everyone to another session of FXTM's Week Ahead Market Themes to Watch Out For. So, we're going to have a review of the markets last week. For those who normally attend the seminar, it's always good to have an idea of what happened last week because this could impact the themes to look out for in the week ahead. After, we're going to have a breakdown of the economic calendar, and this will be followed with technicals and fundamental setups. Now, if anybody has any questions during the webinar, please be free to reach out and ask. So I believe last week was another roller coaster trading week for financial markets. We had the central theme weighing heavily on investor sentiment. Of course, it was the US-China trade developments. So the week started with a wave of positivity sweeping across financial markets on news that the United States and China have agreed to roll back existing tariffs. Now, in the eyes of many, this is seen as a step closer to a breakthrough deal. However, later in the week, we had conflicting reports over this idea being opposed in Washington. So equity markets hit record highs during the middle of the week, but this new disappointing development created risk aversion and set equities trading lower. We saw the S&P 500 jump to another record high based on trade optimism and global central banks easing across the globe. So I always say this to many people interested in the markets. If you look at equity markets, especially the S&P 500, it looks like everything is going quite well. But when we zoom out and we look at core macro themes, there's still concerns of a slowing global growth. The IMF, for example, have downgraded their global growth forecast for 2019 to 3%. The World Bank is seeing world growth at 2.6%. The Organization of Economic Communication and Development is also seeing growth at 2.9%. So in my eyes, I believe there's a disconnect here where equity markets are just pushing higher on trade optimism and central bank easing. However, global growth concerns still remain a major theme. In the United Kingdom, as widely expected, the Bank of England left interest rate unchanged. But I think what came as a surprise to many is we had two dissenters, meaning that probably sometime in the first quarter of 2020, the Bank of England could join the global easing train by cutting interest rates. But as of now in the UK, I think what everyone's more concerned with is Brexit. We have general elections on the 12th of December, and this really does open a can of worms for 2020 because the outcome of the general elections, depending if it's Conservative or Tories, in 2020 we could either see the current Brexit deal being passed before the deadline, more negotiations, a referendum, no Brexit at all, or no deal Brexit. And this uncertainty by itself is enough to keep the British pound capped. In the commodities market, gold tumbled to a 2-year low last Friday, thanks to this the market optimism over trade developments. Now, we all know the relationship between gold and global market sentiment. When risk on makes a return and investors rush to riskier assets, safe haven investments like gold and the Japanese yen fall out of favor. In the near term, I still see gold pushing lower, but then we look at the medium to longer term picture. In the longer term, as long as central banks across the world continue cutting interest rates, gold does have a support to stand on because gold is a zero yielding asset. At the same time, we have slowing global growth concerns. So if risk aversion makes a return in the medium to longer term, this should be enough to elevate gold prices higher. The same stories of the commodities markets as well. Oil prices have been pushing up and down. The main driver hitting oil prices is more demand side factors. And when I mean demand side factors, it's all about concerns over, deteriorating global growth resulting in a drop in demand for crude. This is why we can see there's a very strong correlation with oil prices and trade developments. When there's optimism over trade talks, this reduces concerns over slowing global growth and renews speculation over a rising demand for crude, vice versa. So until we have direction with trade talks, all markets are going to continue trading within the confined range that we're going to discuss later in this webinar. So just to recap once more, investors tussle with mixed signals on the US-China trade front. Equity markets still supported by trade optimism and global easing. Bank of England leaves interest rates unchanged. Gold tumbles to a 2-year low. Oil driven by demand side factors. Now, before we move ahead, does anybody have any questions? Okay, so taking a look at the economic calendar, there's a lot going on this week. Earlier this morning, we had GDP data from the United Kingdom, which confirmed that the UK has avoided a technical recession. So the UK rebounded 0.3% in the third quarter of 2019. But while this is good news in the short term, when we're when we zoom out, you can actually see that year on year, the UK has experienced the slowest growth in almost 10 years at 1%. And this goes back to what we were saying earlier about the Bank of England position to cut interest rates in 2020. I think the major risk event this week will be the US retail sales report on Friday. The reason why this is important is because we know that roughly consumption account 70% of GDP is from consumption in the United States. Now, if the retail sales report shows that trade developments is impacting consumer spending, which is an engine of growth for the United States, this should be enough to renew market expectations over the Fed cutting interest rates again in December, and if not December, sometime in the first quarter of 2020. So there's four central themes that I want us to focus in the week ahead. Even though we've had economic data from the UK this morning, I still believe that the pound's outlook will continue to be influenced by Brexit. So earlier this morning, some political remarks from Nigel Farage stating that he'll support Boris Johnson has actually pushed the British pound higher against the dollar, with the pound US dollar jumping over 70 pips. So this confirms how sterling remains highly sensitive to not only Brexit but political developments in Westminster. Where the pound concludes this week will continue to be influenced by the developments we see on the political front in the UK. In regards to the United States, it's not only the US retail sales that will move the dollar, but it's also if there's any progress made with trade talks this week. Now, we already know how important trade developments are, especially for the US economy and global growth in general. So even though the dollar is still seen as a safe haven asset, further progress on the trade front should reduce concerns over the US economy and ultimately boost attraction towards the dollar, which still remains the king of the currency market. Going back to the commodity space, I'll be paying very, very close attention to gold. Gold has been a nice barometer of global sentiment, and every time there's this feeling of positivity in the air, gold trades lower. When risk aversion makes a return, we can see gold pushing higher. Today, gold is staging a rebound from the two-year low. Let's see how things play out. Should the Hong Kong protests continue fueling the risk-off mood, this should encourage investors to jump back to gold. We're going to discuss the technical levels of gold later during this webinar. However, though, although it looks like bulls have lost the battle, the war still rages on. So just to recap, key themes to look out for in the week ahead. The UK avoids a technical recession. US retail sales to influence the dollar. Trade talks will remain a central theme. And gold back in the spotlight. So now we've discussed the themes, there's three fundamental trading setups I have in mind. The first one revolves around the pound US dollar. The second, of course, revolves around gold. And finally, the euro dollar. Then this will be concluded with a currency spotlight. So I have gold loaded in a weekly time frame, and they say a picture paints 1,000 words, and this is exactly what we can see on the pound US dollar weekly charts. Prices are trading around the 12876 regions based on the earlier comments from Nigel Farage. However, though it looks like there's a strong level of resistance around the 130 psychological level. For as long as the pound US dollar remains below this point, the next key support will be around 1279 and 1270 respectively. For the pound US dollar to really breach above the 130 psychological resistance or break below the 1270 support level, we need to see direction on the Brexit front, and we're not going to see direction until 2020. So essentially what I'm trying to say is the pound US dollar is going to continue trading within a very wide 300 pip range for the rest of 2019. For technical traders who are interested on a daily time frame, it's a similar picture. Yes, the daily time frame suggests that prices are pushing higher with a level of support around the 12790. Even if prices trade follow a upside trajectory, I still see 130 acting as a strong resistance point. Now, should 12790 give way and a pound US dollar trade lower, this breakdown strategy should open a path back towards 1270. Now, if we really want to get very technical with this setup, when we're looking at the MACD has pointed to the upside, and let me load the 20 simple moving average. We can see prices are in the process of breaking above the 20 simple moving average, which is around the 1287 region. So an intraday breakdown above 1287 should inspire incline towards 130. So I've got a chart of gold loaded on a weekly time frame, man. This is a simple visual representation of what we were discussing earlier about how gold bulls have certainly lost the battle, but the war still rages on. So just looking at gold on a weekly time frame, we can actually see that the decline observed last week was quite steep. Gold appreciated roughly 3%, and in the near term, it could continue extending losses based on this risk on market sentiment. However, I still believe that downside losses should be mitigated by the central themes that continue to weigh on market sentiment. And these central themes uh, go back to global growth concerns, just the general trade uncertainty, and the fact that central banks across the world are cutting interest rates. Now, given how gold is a zero yielding asset, it tends to perform relatively well in a low interest rate environment. Right now, the weekly traders will be paying very close attention to see if gold is able to secure a weekly close below the 1460 support level. A weekly close below this point should open a path towards 1440. But going back on a daily time frame, though, earlier this morning it did look like gold bulls were trying to fight back for dominance, pushing prices back towards the 1470 regions. Well, it looks like they're losing control. For bulls to jump back in the game on a daily time frame, gold needs to secure a daily close above 1470, which should open a path towards 1485 and 1500 respectively. Okay. Now, going back to the economic calendar, what will play a key role in where gold concludes this week will be the US retail sales report, given how it will not only influence the dollar's valuation, but sentiment towards the US economy and Fed cut speculation. Okay. And the third fundamental trading setup I've got this week is the euro dollar. So for an extended period of time, the euro dollar's hovered around a 1.100 support level. Now, given the developments happening in Europe and the fact that markets still expect the European Central Bank to continue easing monetary policy, we'll expect the euro dollar to trade below the 1.100 level. But this seems to be, an important psychological support level. Now, for as long as prices remain above this level, the euro dollar is more likely to rebound towards 1.110 and 1.220 respectively. If we do see a weekly close below 1.110, next key point on the euro dollar will be around 1.090. Okay. So just to recap before we speak about the currency spotlight, the pound US dollar is capped below 1.30 on the weekly charts, but could still test this level. We see an intraday breakout above the 1287 point. Gold bulls have lost the battle, but the war still rages on, with 144 the first key support, and a breakout above 1470 open a path back towards 1485 and 1500. In regards to the euro dollar, 1.1 zero still remains an important psychological support. And the currency spotlight this week will be the euro yen. Now, we can see a classic breakout breakdown strategy playing out on this pair with support around 1.20, 0.30, and resistance at 12150. Naturally, a breakdown below 120.30 will open a path towards 119.60. However, a breakout above 12150 should encourage a jump back towards 122.20. As of now, though, it looks like prices are struggling to keep above the 120.30, with 119.60 acting as a key level of interest on the euro yen. Ladies and gentlemen, I want to thank everybody for attending this week's FXTM's week ahead market themes to watch out for. Now, if anybody has any questions, this is the best time to ask. Okay, so we have a question from Fong Hong Chu in regards to gold. So let's go back to gold and we'll try to break it down from daily to weekly. So So when we're looking at gold in a daily time frame, pictures don't lie. Clearly, prices are in a bearish trend, or in the in the process of turning bearish on a daily charts. They've been consistently lower lows and lower highs, and you just need to look at the movements over the past few days that confirm that bears are back in the driving seat. Fundamentally, what is driving gold lower is this sense of positivity over trade developments and the fact that it seems many are burying concerns over slowing global growth under the carpet for now. This is pushing gold lower, with prices trading around 146175 as we're speaking. If this downside momentum holds, don't be surprised if gold tries to test 1440 before the end of the week. And that's probably almost $20 away. However, though, even though short term gold is positioned to trade lower, 1440 could act as an important support for gold to rebound back towards 1460, 1475, 1485, and finally the 1500 psychological level. So short term, gold is positioned to push lower to 1440, but medium to longer term, bulls still have a measure of control. We have another question from Simon in regards to oil markets. Okay, so with oil, it's the same story with oil. I think oil markets are waiting for some direction with trade talks, or until we have a definite driver, if it's demand side or supply side, and we can see the strong correlation with oil markets and trade development. So if we do have a breakthrough between the United States and China, this should be enough to elevate gold prices higher. However, if talks fall apart again, like history has shown in the past, this should be enough to push WTI crude lower. In regards to levels, prices are trading below 57. I'll be paying very close attention to how bulls and bears react around this point. Okay. So, ladies and gentlemen, I want to thank everybody for attending this week's FXTM's webinar week ahead, what to watch out for. For those who still have more questions and with what we've discussed or around team market themes, please be free to reach out to me on Twitter. My Twitter handle is underscore Lukman at Lukman underscore FXTM. Also, reach out to me on Facebook, which literally Lukman Atanaga. So I'll see everybody in 2 weeks' time, and wishing you all a great trading week ahead. Thank you.